Hello and welcome to today's episode of the Craving Crypto podcast. This is episode 4 and we're going to be going over whether you should be trading with fake money or not. I'm going to show you a few websites that you can do this on, how I personally think this can affect your trading for both positive and negative, and then we're going to be going into the market review, discussing one crypto flaw debunked, and that will be today's episode. So let's get right into this. So getting right into this, we always have this document. You can follow along with it. Links in the description where we have the little outline of what we go over. So hit that like, hit that subscribe button, and we'll get right into the market overview. So headed to coinmarketcap.com. We have our total market capitalization at 238 billion. And I want to talk about this for just a second here because we are making a new low in the total market cap. So let's just Google market cycle chart and pull this up very quickly and discuss how this is being affected. So this is a very, very famous and popular Wall Street cheat sheet. It shows a very classic market cycle and how to expect and handle the emotions that are involved in it. If this just pops up here, we'll be able to see very quickly the comparisons between the total market cap and the Wall Street cheat sheet. We have this huge hype cycle right here. And as you can see, that's where the optimism, the belief, the thrill takes place. And then at the very top of the market, that's the euphoria, everybody's a genius stage of the market cap. And then you have this drop and then a right shoulder, or what I would consider to be the bull trap, which lines right up with complacency here. And then you have some pretty deep panic right here. That's what I would consider to be capitulation. Then we make a new low. That's what I would consider to be anger right here at 258 billion. And then finally, we're making another low, and that will be the depression phase of a market cycle. So in depression is the highest optimal point for buying and the lowest risk. And the reason for this is because it's shaken out all of the people that bought the top in the euphoria phase, and it can do a reversal at that point and start on another bullish trend. So us making a new low here is actually nice because it lines up perfectly with the market cap and the Wall Street cheat sheet. So when you can get those two cycles to line up like that, then you have a high degree of confidence that you can be loading into long positions because you understand where the market is going to see its panic and where it's going to see its bounce. So this isn't anything to be worried about. Again, as I was saying before, it wouldn't surprise me if we could test the $200 billion level. Now that would be if we get in for some very serious panic, because it also wouldn't surprise me if we see a reversal pretty quickly and we don't lose more than a couple $1 billion off the market cap after we broke this previous low here at 253. And the reason for this is because the depression phase of the market cycle, the majority of the selling pressure is already gone at anger. So usually the last low ends up being pretty insignificant and it doesn't have a lot of force to it. So if this doesn't go that much lower below the previous low right here, it really wouldn't surprise me either way. But again, 200 billion is another great support zone for us to be seeing if we do kind of impulse down hard over the next little while. As far as the top 5 coins go, we're going to start with Bitcoin at $101 billion in market cap. Price is at $5,910. 24-hour volume is at 3.4 billion, and the price is down 4% in the last 24 hours. Okay, let's just go back here. Ethereum is currently at $424. Let's let the market cap load here. Total market capitalization is at 42 billion. 24-hour volume is 1.3 million. And the 24-hour change is down 4%, so the same as Bitcoin. Ripple is 17 billion, 44 cents, 222 million, down 4.6%. Bitcoin Cash, 11 billion, $663, 345 million, and 7% down. So that one's bleeding hardest out of the top 5. EOS is at 6.7 billion in market cap. Price is at $7.48. 24-hour volume is at 730 million, and the price has fell about 6.5%. So this is all looking pretty normal as we've taken out that previous low for us to see a little bit of blood in the market cap. It's actually not that crazy. We're not seeing any 20% drops currently, but like I said, that can occur just because in the depression phase, nobody knows where the exact bottom of that area is, but you know that it's coming soon, and that's why it's best to average into positions. All right, so let's talk about should you trade with fake money, pros and cons, and kind of my thoughts on this overall, because I have been trading for a while and I've traded with fake money, I've traded with real money. I know the emotions that are involved, the ups and the downs, and the benefits and the things that can kind of slow you down if you take too much advantage of this tool. But yeah, we'll get right into this. There's one website that I am providing that you can do this on. It's called cryptospaniards.com. They have about 100 different cryptocurrencies, the top popular ones that you can trade between. You just set up an account on here, you fund your account. It gives you fake money to trade with, so you can choose how much you want to start with. Me personally, I just started with $1 million here because, you know, it's fake money. Might as well start with a crazy high number for fun. And then you can go ahead and search through the different coins, and you can buy positions in them. You can sell positions in them once you hold some of it. For example, here I have 9.9 Bitcoin, $800,000, and then 3,500 Binance coin. And again, I can click sell here. If I see some downside happening, I can go ahead and type this in, how much of my coins that I want to get rid of, how much I want to buy back into. And it's all just in a very simple interface that you can track and chart. There's also like a leaderboard of top traders on here. So if you get like really bored and just want to be one of the most profitable investors on this website, you could always, you know, sit here and practice every single day and get up into the leaderboards here. Might be a fun little game for you. Now, trading fake money has its benefits, and here's the benefits of trading it. Firstly, it would be that you can ladder out all of your positions. You don't have to worry about losing actual capital, meaning that when you set your buy orders and your sell orders, you're not thinking about, oh no, what if I lose another $500? Or oh no, what if I lose another $1,000? It's more just a game for you, which, you know, that's why it's good, but that's also why it's bad. And we're going to get more into that in a second. But the main reasons that it's good is, again, that you can eliminate the emotion and you can play with your orders. You can get the hang of trading these cycles. You can practice all of your different trading strategies on here without having to win or lose real capital. But the downside of that is that when you're in a trade, there's an emotional aspect as well. So for example, if I'm in a large short position and the price starts rising, I might second guess my position. I might take out, I might start making decisions that aren't good trading decisions because I'm emotionally attached to the direction. But if you're trading on a website like this, it's a simulator, you're not gonna have any emotional attachment to that direction, meaning that you'll just be able to hold through all of your positions perfectly, which can be a good thing at the very start if you're learning this. But once you get more into it, you really want to be trading with real capital, even if it's in small percentages. In fact, you really should be trading in small percentages. You know, don't put more than 10% of your portfolio in any one thing unless you're doing some long-term investing. And that should be aside from your trading portfolio in general. It should be a completely different portfolio than your short-term trading one. So, you know, you want to learn with real emotion. So take 5% of your portfolio or 3% of your portfolio or 2% and trade, you know, because then you'll be attached to the direction still, because you'll still want to make money and you'll still want to win, but you won't be in fairyland, right? Because this website's awesome for getting the hang of things, but again, it's also fairyland. You don't have to deal with any of the real emotions that are involved in trading. If your trade starts going in the wrong direction, you might just hold through it and wait till it goes in the right direction again. When in the real world of trading, you have to worry about the trade going too high and then you having to take a loss. And there's just more variables when you're, again, emotionally attached to the direction. This has its pros, it has its cons. For me, I don't really use these too much, but it is, you know, a good tool. And if you are a super beginner and you don't want to risk losing real money at the beginning, you might want to, play around with this a little bit, get the hang of it, just so that you can predict these charts and then understand the cycles. So when you are playing with real money, it isn't so stressful for you. You kind of know what happens. You've watched these things go up and down and up and down. So, again, this is cryptospaniards.com that you can check out. All right, so crypto flaw debunked. Crypto is only for speculation. So I've heard this argument quite a bit. People are always coming out and saying, well, the only reason that Bitcoin hit $20,000 is because of speculators. Or the only reason that crypto is in such a run that it is currently is because there's so much hype and people are speculating on the price, so they want to make a lot of money. And although there is a level of truth to this argument that cryptocurrency is very big because you can make money on it, there is some fundamental issues with this argument as a whole, because it's saying that the only reason that a great technology, good idea that has a real world use case is getting hype is because you can make money. No, that's not true. This is getting hyped because it's useful, and also you can make money speculating on it, which then increases the amount of hype that goes around it. So from a core perspective, from the very beginning, technology is good, it's useful, and has a demand. Last video, we talked about how other countries are still buying Bitcoin, even though the price dropped. These aren't people speculating. They actually need Bitcoin and cryptocurrencies because there's a demand for a real world use case. And so just saying that crypto is only for speculation is a flawed argument, purely because of the fact that it's a good idea and that it was going to be a big deal whether you could make 1,000% in a month speculating on it or not. That just increased the amount of hype that came around and made it an even bigger deal, kind of like pouring gasoline on a fire. So, that is my thoughts there. I know that I personally speculate on crypto a lot, and why wouldn't you? Every investment should have a speculation aspect, just like the stock market, just like gold, just like oil. They're all speculated on. The price jumps, the price falls. It's human emotion. This is what I teach in my channel, these market cycles. So it's not a bad thing. It's just something that you have to be aware of so that you don't get stuck buying tops, and then you don't get stuck making bad investing decisions and then trying to blame the government and saying that crypto is only for speculation and that's the only reason it went up in the first place, because that's not an attitude that's going to make you money, and not consistently, especially in this space. All right, some Q&A from the comment section. So one comment from last week is from Davey Furtado, and again, I apologize if I don't pronounce that right. I'm not the best at pronunciation. He says, hello, Dallin. When too many people knows a target, it is said that it won't happen. At this moment, we have a lot of people that have the 100K target. Don't you think that that might be a reason that it won't reach that high? So this is a great question. Thank you for dropping it in the comments. Now, my personal perspective on this is that when a lot of people expect it to hit a target, it actually makes it hit that target. So you can just Google self-fulfilling prophecy. There's great wiki articles for more information on that. As far as the 100K target though, it's really a Fibonacci target, and it's also when you take the market cycle and apply it to the way that the next wave will expand, it's a very, very mathematical target as well, and a psychological resistance number. I would put it a pretty high probability that Bitcoin hits 100,000 per coin. And that's just because of the way markets expand, how they get parabolic, overvalued, undervalued, and then go parabolic again. Once they're parabolic again, it's crazy how hard they go. One example of this happening is in the NASDAQ composite. This is the internet bubble of the early 2000s, and we had a really, really big sell-off between $5,000 and $1,000 in the NASDAQ. This was a huge, huge panic. Everybody got really scared, and everybody was worried that it wasn't going to ever go up to new highs again, and people started selling, and it really screwed a lot of people over. But if you look what happened after it did, the NASDAQ is rallying to new all-time highs currently, like it didn't even know what a correction was, you know. And this is just starting to go parabolic. We might have a short-term little sell-off back to the top, like this. You might shake some people out here, but this is just starting to go parabolic. So we're talking about quite a bit of growth left inside of the stock market. And if you look at the way Bitcoin looks today, it looks a lot like how the NASDAQ did between 1990 and again the early 2000s. So if we have the same kind of scenario play out, Bitcoin will reach 100,000 per coin. It will start ramping back up like this. And when things are really in full bull mode, it's crazy how quickly markets will jump and increase in value in comparison to when they're in the corrective phase of their market cycles. But yeah, thanks for that comment, man. Again, it's just a mathematical target. It's pretty likely that it hits it. Everybody was expecting for it to hit 10,000 and it hit that. And then once we hit 10, everybody expected 20 and then we hit that. And then yeah, everybody did expect 30 at the top of the market, but you know, come on, not every single time it's gonna go right when it does. People have to get shaken out and then it will go right back up to the parabolic movement and continue blowing people's minds. Quick summary is trading with fake money can be very useful as a beginner, but you don't want to rely on it. And also you still should be trading with real money in smaller percentages so that you're still getting used to the emotion and you're getting all of the aspects that are necessary to be a professional trader with actual capital, because it can be a crutch, although it is a very useful tool. Thank you so much for tuning in today's episode. I hope that you enjoyed it and learned something. Go ahead and hit that like button, hit that subscribe button, comment below if you have any questions or ideas for my next video, and I will see you guys in the next one. As always, stay profitable out there.